Good morning, ladies and gentlemen, and welcome to the President Energy Interim Results Investor Presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your question at the bottom box and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company review all questions submitted today and publish responses where it is appropriate to do so. These will be available via your Investor Meet Company dashboard. I'd also like to remind you that this presentation is being recorded. Before we begin, we would like to submit the following poll. I'd now like to hand over to Peter Levine, Chairman of President Energy. Good morning, Peter.
Good morning. Good morning. Thanks very much. I hope everyone can hear me. I'm joining by phone, obviously. Thank you very much, ladies and gentlemen, for joining us today. What we're going to do is we're going to have a very brief presentation, which will be on your screens. And I'm going to take you through those slides with the assistance of my colleague, Rob Shepherd, who's the Group Financial Director, who's also on the line. And then we're going to, in the usual format for this investor meet, we're going to invite questions. I think there are already two pre-sent questions, which we'll be pleased to answer. And any more, please let us hear from you. Okay, so here we go with the interim presentation. So if you would kindly turn to page 3 of the presentation, which should be on the screens. Is it on your screen?
Yes, it's all clear. Thank you, Peter.
Right, here we are. So, excellent. Thank you very much. So, this is a selected results summary. Now, there's nothing necessarily in this presentation which isn't in the RNSs that we issued today. We issued 2 RNSs, but nevertheless, we'll just go through it very briefly. What we did in this table, we actually drew out what we thought were the key parameters, the key metrics which we thought were very important. And the headline is, it's nowhere near been as good as in H1 2019. And that absolutely directly flows from the severe depreciation in the realized price that we've seen. And that comes out very clearly. In fact, we've increased production year on year, and actually for the full year of 2019 there's an increase. The revenue, therefore, has significantly dropped. And as I said, that's because of the most dramatic fall in peacetime oil prices that there's been in living memory. That directly has geared the adjusted EBITDA, a reduction as well. But very importantly, and again, don't judge us by the things that we cannot control. We can't control the oil price or the gas price. What we can control are 2 things. We can control production and we can control costs. And that flows through to free cash generation. And that free cash generation is the best part of $6 million, which we've generated from core operations and from intelligent treasury management. Our group debt, which is another thing that we view very importantly, has gone down significantly. At a time when many of our peers are effectively anchored to the sea floor because of the enlarged amount of debt, which the only way to do that is actually to reorganize it and push it out. We've not pushed it out. We've actually materially reduced it by taking proactive action. Now, I recognize that some shareholders, because that has affected, in effect, made dilution, have voiced their concern about it. But at the same time, we gave shareholders the opportunity to come in at the same price. And we did that. And that's very important because at this moment in time, borrowings and net debt are vital in terms of ensuring that they're down, because it means that we have got the best possible advantage when things get better. In effect, we've got debt capacity at a time when most of our peers, frankly, don't have. Administrative expenses likewise have come down. Well, operating costs likewise have come down. Now, the financial metrics are really for more of the analysts involved, but the bottom line is that they are really at the bottom rank of our peers compared to, and taking into context of our share price, which of course the current EV to 2p ratio determines. So in effect, yes, there's no question about it. These results are a very significant worsening from H1 of 2019. But if you look at what is driving that and look at the progress that has been made and the reduction of the net debt, we're actually in a solid position, as well as, of course, generating that cash. So that's why we've developed this table to actually say, okay, you're going to see the headlines, you're going to see the net profit. However, just look at what we've done and compare ourselves, judge us by the companies that we relate to. And if you do that in a time of great darkness in the first part of 2020, then you'll see that actually our performance relatively is solid and it's fair. Now, the next slide on page 4, if you can turn to page 4, is the financial highlights and performance. So you can see that this just confirms how much the net debt has gone down, how much the G&A has reduced, how much the group turnover has gone down, directly resulting from the oil price. The corporate and financial summary, which is on page 5, slide 5, you can turn to that. That is the first bullet point, is a very important bullet point. Through all my years in not just the oil and gas business, but in other businesses, one of the fundamental key driving points is managing and controlling the end market. Now, for those of you who are invested in oil and gas companies, you'll have probably seen that a lot of oil and gas companies in the heat of the crisis, and even perhaps now, have shut in their wells, had to shut in their wells, because the end market evaporated, the demand evaporated. Trafigura is one of the largest commodity traders and logistic companies in the world. It's a multinational company. It is now a significant shareholder in us and a significant off-taker. With their assistance, we never once had to shut in a well. We kept selling our oil, which is really important because it keeps the cash flow, keeps the bread on the table as far as the business is concerned. Yes, our group turnover did decrease, and I've already mentioned that, but the cash flow is very solid. The third-party financial borrowings, which is a part of our reduced net debt, are now only 3.7 million. That's the amount we owe to the bank, effectively. The rest is a long-term, covenant-like, shareholder-related debt. As people will know, it's relating to one of my own beneficially-owned companies, which is supported, obviously, and it's long-term debt. So despite everything else, we actually kept EBITDA positive. We're continuing to cut costs going forward, and we have actually, before the non-cash items, compared to depreciation, amortization, impairment, and non-operating gains and losses and deferred tax, we actually made a positive net profit. So if you turn to slide 6, which is operating highlights average group production, you can see that production has been climbing. Now, there's no question. We want to increase that growth significantly. And certainly the things that we're doing, including the announcement we published today, will, we believe, materially increase that level of production. But it's not just about production. It's about what you are getting in terms of your margins. And that brings us on to the next slide, slide 7, which is an operational summary. So we increased our production by 14%, even in the bad times, and continued selling it. I can't stress enough that it's very important to have the end market. Well, operating costs reduced by 17%. The reserves, the valuable reserves in the Rio Negro province went up, and our replacement of reserves, and we have replaced reserves effectively, which we've produced since the end of 2017, and we replaced them so that they're now 67% higher than they were originally, for 167% increase. We laid a pipeline, 16 kilometers subsurface, 6-inch steel gas pipeline, unlocking the Estancia Deca gas field. And even through the darkest times, as I said to you, we did not shut in one well due to inability to have our production offtaking from nowhere, whether it's from Louisiana, whether it's on any field in Argentina, from absolutely nowhere. And importantly, our first export of oil from Argentina took place. Louisiana, well, last year we had a terrible year with Louisiana, with shut-ins and floods and workovers. This year, it's been operating smoothly, and as people know who are shareholders, it continues to make a profit. The operating highlights, well, this is all part of the margins. To some extent, it's irrelevant. You could be producing 60,000 barrels a day if you're not making your margin on the Mr. McCorber principle. The bottom line here is we are reducing the well costs. Obviously, as you increase your production, you're going to reduce your well costs. But in any event, the core costs have come down, and we are taking action at the end of this year and the beginning of next year to reduce that even further. Now, the next slides are pictures, and I invite anyone on this call to look at our Twitter. We keep our Twitter updated with news and videos and pictures every week. All of these pictures you'll see on our Twitter account. And you can see the drilling of Las Basas, which is the other announcement we issued today, which is a very good testing result. And that will be adding pretty significantly to our production level by the end of this year. It will be on at the end of November. And that was a successful drill, which we just completed on time and on budget. The second well that we're drilling, an announcement will be made on that in due course when we are ready to make that announcement. That is an exploration well. Okay, operating safely through COVID-19. Throughout this, as anyone who's been checking out Argentina, Argentina has been one of the worst countries affected by COVID. It's had a lot of tragedy in terms of loss of people, and we've got to take great care. And through all this drilling, through all the actions that we're taking, we have managed it safely, we have managed it securely, and we have come through it, or are still coming through it. Of course, Kevin is still with us and will continue with us for a reasonable period of time. But our HSE team has performed extremely well. At the end of last year, and this is slide 11, the development of Angostura, this is an acquisition that we made effectively for zero consideration last year, and it's producing well. We turn to page 12. I think that when you look at our market cap, it really belittles and disrespects the amount of work and management and extent of our operations that we have in Argentina, as well as, of course, Louisiana, but let's look at Argentina. We laid pipeline in 3 months, from start to finish, on time, on budget, unlocking it, the production of Estancia Deca, which is now coming on stream greater and greater. So where are we on current trading? Well, the first 2 months of Q3 have actually, as you can see from the first bullet point under current trading, has actually shown an increase in the average for Q2, which was, of course, the worst of the quarters of this year, we expect. We're currently drilling our second well. The first well went very successfully, and we're going to be producing approximately 600 barrels of oil equivalent a day from that well at the end of November. You add to that the already worked over new production of approximately 75,000 cubic meters a day, which is about 440, and you get by the end of November an additional 1,000 barrels of oil equivalent a day of gas, which will be coming on stream. And that's ignoring anything that comes on stream from the new well, which we're drilling, if indeed it is successful. The Louisiana low-cost production continues, and despite the hurricanes, the record number of hurricanes that have hit the Louisiana coast over the last few months, the maximum period of production that we've shut down is a day and a half each time. And it's back normal, everything is working fine, and our offtake is no problem. Farm out discussions are taken to the PLC concession. Now, I think there's going to be a question which is going to be asked, why is the share price as it is? And one of the answers is, of course, and I'll mention it again, is historic. Purity, people have forgotten about, quite understandably. It is, however, a valid exploration target. We are in discussions with a national oil company in relation to that. That was suspended initially because of COVID. It's now re-energized, and we're in weekly contact and discussions with that company. And whilst we can't guarantee any result, the bottom line is it has passed muster in terms of their technical department, which is very important to us because it validates our technical appraisal of that concession. On the current estimates, we're giving guidance of 2,800 to 3,000 average barrels of oil equivalent per day for the full year, and you can see the split of 70 to 30. On slide 14, for those of you who are more technically minded, this is the significant prospectivity of the Paraguay concession, which we have. It's Purity concession. And as I said, until it's drilled, well, we're not going to say anything about that, but we're making progress on those farm out discussions. No guarantees can be given, and we are obviously taking it on a very conservative basis, and that's why we're not making much of it. So, ladies and gentlemen, in brief, that's the results presentation, which we have. Now, there's Rob and myself, who are present and very happy to answer questions. So I'll pass you on to the moderator.
Very kind of you, Peter.
Thank you very much.
Thank you, Peter. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the management team take a few moments to review the investor questions that have been submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard. And before we just enter into the Q&A, I'd also like to remind you that your feedback is important to the company. Immediately after the presentation has ended, you'll be redirected for the opportunity to provide feedback in order that the company can better understand your views and expectations, and we will be delighted if you could provide the company with your feedback. Peter, as you kindly highlighted earlier, investors had the opportunity to pre-submit questions. We received 2. There is a slight overlap, I think, amongst some of the questions that have also come in over the share price, so perhaps we can answer. There was a question that came in as what's holding the share price back, and the first pre-submitted question was, in your opinion, what is the underlying reason for the continued poor share price despite the excellent work recently undertaken by President? Maybe Peter.
I think Rob and I I'm very happy to answer that question, but obviously I'll also invite Rob to give his tuppence worth on it as well. We can only, as a company, tell it as it is now, currently. I think that one of the reasons the share price is where it is historical reasons. The disappointments that took place 6 years ago with Paraguay, perhaps, and maybe with some of the drilling that's subsequently taken place, maybe 3 or 4 years ago. I think it's a state of mind regarding Argentina, without looking at Argentina as a whole, without looking at how we're doing in Argentina. The results speak for themselves there. And I think that basically it's a problem with production companies. It's very sexy having something which is exploring and very easy to get a high valuation when you haven't actually produced anything, or even if you found something when you still haven't produced anything, because the real test is how you produce and the management that you've got. And the bottom line here is that we are a real oil company. We've got significant management on the ground. We lay pipelines, we produce, we do infrastructure, we treat oil, we transport oil, we've got gas pipelines. We are multitasked in terms of oil, in terms of gas, in terms of spread out. We are a real oil company and producer, and that is to some extent not sexy, even though actually it's the cash that counts. And ultimately, cash and value will out. And frankly, that's where we are. All of those factors, there's no particular one factor. I think you could say, oh, well, it's because a broker like Berenberg are messing around with our shares. But I'm not going to say anything about that. I'm not going to make accusations. Other people have said that to me, and I said I couldn't possibly comment. The bottom line here is it's a number of factors. It is not just one factor. I mean, Rob may have different views to me, and that's fair because we're colleagues. So, Rob, I mean, I invite you to say what you think at the moment to that question.
Thanks, Peter. I'd never have different views. You're the boss. No, so I think simple principle is that if you have more sellers than buyers, the price goes down. And so all we can do is set out what we're doing, what we're trying to deliver on, what our expectations are going forwards, the sort of under promise, over deliver principle. So you'll have seen, hopefully, people following the company that our sort of visibility on Twitter, the way in which we present news in RNSs is hopefully improving to make it easier and simpler for people to see the underlying message. And then it's on us to get out and tell the story. And clearly, given the challenges over the last 6 months, it's become less difficult to get onto a Zoom call or a webinar. I think there are some 50 or 60 people on this call, and that's great because we can talk directly to people. You can listen to Peter, ask questions, and hopefully get responses. So there are the existing people who have interest, and hopefully by demonstrating what we're up to, some who may otherwise be minded to sell may not, and others who are not yet holders may be minded to buy. And then one other thing we do when we talk to people is just to try to point out the relative value, right? There are a number of others, companies arguably with similar profiles to ourselves, and some have a great run, and in the ordinary world, people sell one share, buy another, buy one share, sell another. So it's all about just continuing to get the message out. As we're aware, there have been lots of challenges in recent years, specifically with President, with the industry more widely around transitioning away from non-renewables. It's an element of the US presidential debate at the moment. So there's a lot of focus, but all we at President try to do is to demonstrate the things that we can control. We can't control the price, but we can control our costs, we can control our production, we can control our project management, our delivery. And hopefully, all we can continue to do is to demonstrate, A, that we're doing that, and remind people that's what we're about.
Thank you very much, Rob and Peter. And just that number is over 70 people on the call as we stand here at the moment. The second question that was pre-submitted is around forecast, so mindful about what you can or can't say, but the question reads, what is the forecast cash flow for the next 2 quarters, and do you expect existing and forecast cash flows to be sufficient for your continued operations?
Latter point first, yes, because we will contour our operations to our cash flow. The former question is, it's in our RNS, which we've said about, projecting from our production. As I've said to you, we can't control the oil and gas prices, and I believe that there's another question on oil and gas prices, which I'd rather maybe I should preempt it now by saying, someone's asked, can you give some guidance regarding current oil and gas prices in Argentina? Well, what we can say that it's at the current price, it's about $37 a barrel. Oil price has gone down a bit. We take the view worldwide prices will be are under pressure and may continue to be under pressure and are range bound. We don't see oil prices going beyond certainly 44, 45. We can see oil prices perhaps going down to 35. But Argentina is in a very strange position in relation to oil, and there is a deficit, and we actually can see at some stage, and this is a discussion which we've had in our board meeting, which, as you know, Traffic I have a member on our board. We can see that there could be some divergence at some stage. If the oil price goes a bit down, say to 35, that the oil industry is so vital to Argentina's economy that in effect, you may see that the oil price in Argentina is higher than Brent, and it has been in the past. There is precedent for that. In relation, so we're finding, as I said to you, it's important that we generate the appropriate savings in order to maintain that margin. So yes, we can cope with it at 40, we can cope with it at 37, we can cope with it at 36. in relation to gas prices, that's just very interesting, because unlike oil, which did have a support mechanism but hasn't anymore, it's now free flowing and fluctuating. Of course, related at the moment to Brent, similar to what I've just said. Gas, the government have just announced that there will be what's called a gas plan 4 to support the gas. They desperately need gas prices to increase to provide for investment in gas. I think amongst people in the industry in Argentina, there is little dispute that there will be a gas deficit in the next 12 months in Argentina. And that gas deficit will drive up the price. Gas Plan 4 envisages a maximum price of approximately $3.5 per million BTU. And that will also bring up the price of companies which aren't in Gas Plan 4. It may be that we'll go for Gas Plan 4, but what we certainly see is because of the deficit, we certainly see that gas prices will be stronger going into next year. And we see whatever will happen, that there will be a deficit. And as an example, we are the only company in the whole of Rio Negro province, and that includes YPF, the national company, as well as very large other companies, larger than us, who is drilling. We're the only company that's drilling conventional. There are companies that drill non-conventional, but so far as I'm aware, there's only 2 companies in the whole of Argentina that are actually drilling conventional wells. And the future is conventional for our business. Why? Better margins, less capital intensive, quicker payback. So hopefully I've answered 2 questions in one.
That's brilliant. Thank you very much indeed.
Mr. Moderator?
Thank you, Peter. So that deals with the pre-submitted questions, and I know you haven't had an awful lot of time to look at the numerous questions that have been submitted during the live event. Perhaps, Rob, if I could hand over to you, if you wouldn't mind accessing the Q&A tab, and perhaps if you start at the top and perhaps you could address the questions where it's appropriate to put a response to.
Yeah, Peter, thanks, Mark. I passed on a number of those questions to you, Peter. Anything you want to pick up at this point? I mean, I think you've covered some about the share price that we all share. Questions around production guidance. I think we gave average guidance for the year.
If I could also ask you to read out the question, of course, because no investor can see another investor's question, that would also be very helpful. Sorry to cut in.
No, that's fine. There are a number of repeating themes. Sorry, Peter.
No, it's all right. I mean, Rob and I will take turns on that. Obviously, Rob will do the financial side. Do we have any further liabilities with the Louisiana asset we relinquished? No, we've provided for it fully in the interims. That was one question. At current prices, what do you estimate the payback period for LB 1001 to be? Under a year. Temptation to take it private. And that's an interesting question. Can you say anything about your commitment to have a listing? Well, the fact that we're doing this now is proof positive that we are doing absolutely everything we can to make the market aware of the actual current position of presence and what its potential is. So that in itself, that is a commitment to do that. And we hope that at some stage that will be taken notice of. Are we seeing any increase in appetite for M&A in South America? The bottom line is not really. We're seeing some. Are we looking at things? Yes, we are. But at the moment, I'll be frank with you, that it's in Argentina, the things that we want aren't for sale, and the things that we don't want are for sale. And because we've got such potential in Argentina itself, we'll be concentrating on that. And one of the potentials is perhaps a long forgotten or long criticized Presta Guardian field. Presta Guardian is a license that we've got until 2050. It is still producing. And that production, albeit much smaller than in Rio Negro province, is pretty stable. And in oil and gas production, it's all about stability. It's all about decline curves. And it's all about maintenance of the field. Now, what we've got there is a type of oil, is heavier oil than we have in Rio Negro province. What will happen in Argentina, because of the emphasis on the Vaca Muerta, is that there's going to be more and more light oil. This is actually a problem that's not just in Argentina. It's echoed in many other places. But refineries, to make them work more efficiently, need the heavier type of oil. And the heavy type of oil is actually in Presta Guardian. So in 2021, we are certainly looking at the possibilities of drilling in Presta Guardian. It may be that we'll be drilling by mid-year in Presta Guardian if we can get the finances right. At the moment, our Presta Guardian realization costs, which were very low, have now increased, and we are actually supplying Trafigura for the first time our oil from Presta Guardian. It's a long way to truck, but it's worthwhile for them and it's worthwhile for us. If we can actually stabilize the oil price in terms of what we get, so we can actually project forward, then certainly that would be part of our planning to drill. And that has got significant potential in Presta Guardian. We've said this before, we've had a failed well in Presta Guardian where we were rather too ambitious in terms of doing a long leg horizontal well. We're not going to make that mistake again. We're going to be actually drilling vertical wells. We know where we're going to drill them. Now it's a matter of matching up the economics to the oil price and going forward. But most certainly that can provide the heavier type of oil which refineries will need increasingly in Argentina. Any news on potential acquisitions? No, not that we can share. Sorry. Update regarding the renewables. We made it clear that in terms of renewables, it's got to make financial sense. Now, I know there's a mad dash by Big Oil for renewables, in no small part geared by the bonuses to CEOs by funds and by the board of directors of these big companies to actually go willy-nilly for renewables. But renewables, unless they are exceptional, are basically annuities. You might as well buy an annuity. It's like a fund, and they're more suitable for funds once they're developed. The bottom line, therefore, is for us to look at renewables in a critical eye and say, does this make financial sense to us? And at the moment, we've not seen anything that makes financial sense to us. Are we looking? The answer is, of course, we are. But it's got to pass certain hurdles. We're here to make money for business. The hydrocarbon business in Argentina is not a short-term business. It's not a bit like Europe. It needs a hydrocarbon business. It's a very big country. Electric is making inroads into it. Hydrogen extremely small. Solar is there. Of course it is. And wind is there as well. But hydrocarbons is a major industry and will continue certainly for the foreseeable future in Argentina. And this is where we're seeing our stall.
Thanks, Peter.
Helping regarding forward prices. Sorry,
I think you might want to take a quick breath, Peter. Well, I'll just on the acquisitions point. I think that's a really important one, and I often say, not always when Peter's on the phone, but the president has an activist investor on the inside, and so I think the degree of alignment we get through Peter's shareholding directly to the management team is really something that sets us apart as a company. And we've looked at a number of acquisitions previously that we've passed on that others have then gone on to do, and are quite comfortable doing that. It's not about top line growth. We know in our own portfolio a barrel isn't a barrel. There's different value we see in Rio Negro versus Presta Guardian. So if we were a management team incentivized purely by growing barrels, we could have done that 10 times over in the last couple of years and have been in a far worse state for it. I think it's key that we focus on sustainable value creation. Now, there's been a whole discussion around the value being created in the company not coming through into the share price, but that's a challenge that we're up for. And sometimes actually shareholders should be pleased that we look at deals and don't do them as opposed to do them. Sorry, Peter.
No, thanks, Rob. That's extremely valid. There are many deals that I've seen companies do which are basically company killers, and including in the oil industry and including in Argentina. So the strength of our balance sheet, it gives us flexibility, and so does Trafigura gives us flexibility for these acquisitions. The question of whether Trafigura are helping regarding forward prices, of course, it's not appropriate for me to comment, other than the fact that the end market was absolutely in the forefront of our minds when Trafigura came on board. And it's a strategy which has worked. We've not had to shut in any wells. We work very well with Trafigura, and Trafigura as a major shareholder are giving us active encouragement to develop our business. And indeed, the last board meeting, we talked significantly about the Presta Guardian field and about how much that there is potential there, and that's why we're focusing on that. At this moment in time, sometimes if you've got the potential internally, it's always best to look internally rather than make a willy-nilly acquisition out of desperation. And I'm afraid, in terms of our industry, that's what a lot of companies are doing. They're being pressurized to do something. They buy something which looks potentially attractive, and oh dear, they've got P&A, plug-in abandonment liabilities, and they come back to bite. But the management, because the management don't have skin in the game, with the greatest respect, all they're bothered about is just hyping up the share price very quickly. And we're in it for running a business properly and in a medium to long term. And that's where we're coming from. We don't give free shares away to anyone. We don't give things like that. Those just do not occur as far as President's concerned. We run it right, we run it properly. And if we're making developments, we're making developments based on sound business decisions. Do we have a plan B if the farm out fails? Yes, we do. So obviously, this is a discussions which we're talking about the farm out. We're going to proceed in that, and in the event that it fails, and as I said, no guarantees to success, but so far it's progressing. Then we will look at a plan B. We have something in our mind, and we'll be saying more about that in the event that something happens. But there is one. Are there any legal problems in Paraguay per bulletin board chat? None whatsoever. Absolutely none. That's it. No notices, nothing. So I don't know where that's come from, but the answer is absolutely fine. And in terms of the company as well, everything is just fine. We're not involved in any court cases, no potential litigation. Everything is clean as you would expect from a company which is run according to basically world international standards, not just of HSES, but of governance as well. So environment, social responsibility and governance, we take extremely seriously. As I said, we're a very responsible management and operating company. And unfortunately, the share price belittles, the market cap belittles what we actually do, the extent of our operations and our success. Nothing can be said more than looking at our drilling. We've drilled it on time, on budget, and saved a lot of money compared to drilling in previous years. At times of COVID, and being able to handle all that at the same time, building pipelines, and not only that, starting to fill those pipelines as well. So our core business is good, solid in the context of judge us not just by our last year's performance, because last year is last year for many, many companies. It's this year. Judge us relatively by our peer group, judge us by what we're doing, judge us by our cash flow, and judge us by what we say we do, we actually do. And that's and that really sums up President. Rob, is there any more questions that we have that have been submitted to us?
No, I think I think that probably covers it, Peter. So it's almost for you to wrap up now, I think.
Yeah, that would be great, Peter. If you would, that would be great. And obviously, for any investor question that we haven't seen, obviously we can review post that if any come in post this as well.
Thanks very much. Well, we're a very transparent company. If we do wrong, we actually say it. If we do right, we actually say it, but we don't go over the top. As I said, we concentrate on margins, we concentrate on cash flow. We've come out of the worst period in Q1 that there's been, and we've come out of it in a very solid position. With respect, relatively far stronger than most companies, with very low third-party debt. As I said to you, the bank, we only owe 3.7 million to the bank. Very supportive shareholders. We've secured the end market, and we've got great cooperation between us and $170 billion turnover business, Trafigura, who's one of our second largest shareholder after myself. That's all. It speaks for itself. And hopefully, by getting across and doing things like this investor meet, with so many of you kindly ringing in to listen, and we're very grateful for that and humbled by the number of people on this call. and also by our Twitter, which please we invite people to look at, and by what we're saying on a regular basis in terms of news. Hopefully we'll get that across, and that's the most important thing. All we can do as a company is run our company well. We can concentrate on the things that we can influence and get that message across. But we are in as good a position, frankly, as we've ever been. Our assets are as good as they've ever been, in fact better, and our potential is very significant, both by way of organic and the ability, the financial flexibility, and the shareholder strength to be able to expand going forward in the right way. I think that's it as far as we're concerned. Rob, do you want to have the last word?
No, I'm really just repeat what we said, Peter. We'll continue to do everything we can. Hopefully, with Twitter and with other channels, sort of communication, we're showing what's happening on the ground, and it's very exciting. And we'll just continue to deliver. And it's on us, on our side, to get out and tell the story to as many people as we can, and point out the relative opportunity here. And recognise it's not the easiest time in the world right now, but really appreciate everyone's interest and time that people have taken to listen to us this morning.
That's brilliant. Thank you very much indeed, Peter. Thank you very much indeed, Rob. I think obviously having addressed those questions, anything that comes in after, we'll obviously make available on your dashboard. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback. If you access this meeting from our website, then the feedback page will appear automatically. If not, it will take about 30 seconds for the link to appear on your screen if you connected via the email. On behalf of the team at President Energy, we would like to thank you very much indeed for attending today's presentation. That now concludes today's session, and good morning to you all.